Welcome back. Now let's shift focus and speak to our next management for the day. We have Kirloskar Oil Engines that reported an in-line set of numbers in Q3 FY26. Revenue saw an uptick of 29%, while the profits jumped 60% on a year-on-year basis. We are joined by Gauri Kirloskar, MD at Kirloskar Oil Engines, to talk to us about the outlook of the company going forward. Gauri, good afternoon. Thank you so much for joining us on the show. Let's start by talking about your revenue. Last couple of quarters, Q2, Q3, you've managed to see that steady growth of 28, 29%. 9-month basis, you managed to see a 22% growth. What is the outlook for FY26 all overall, as well as in terms of Q4? Would you be doing better than what we've seen in the last couple of quarters?
Yeah, good afternoon. Thank you very much for having me on the show, and thanks for your question. So as an organization, we've set out an ambition for the next 5 years with clear growth targets and also clear growth pillars that we're focusing on. And these are sort of our leading indicators in terms of technology tracks or product portfolio, and also some work that we're doing around the channel. And I believe what we're seeing in terms of our growth rates is really the results of those efforts that we've been putting in on a quarter-to-quarter level as well as on a year-to-year level. The demand has been strong as well, but of course our ability to execute has been very important, and I think we've been doing that well. Coming to the specifics of this quarter, the power gen segment especially grew 44% over last year, and I think that's a result of the strategy of our move into the high horsepower space, where we now have a variety of products that we can offer our customers. We have also seen strong growth in our industrial segment, and all the other segments have grown as well. So it's kind of been a broad-based growth, and it's been a good performance across sectors. And I hope that this trajectory will continue.
That was going to be my next question, Gauri. Do you think this trajectory will continue? Because it is high double-digit growth, 44% for power gen, as you mentioned. For LHP, it was aided by incentives as well. So do you think if the support goes away, the growth rates could continue at the levels that we saw this time?
No, I don't think so. I think that, the LHP channel is actually a retail channel. So, incentives are part of the world of retail, and it's something that, we continue to do on and off. I think what is really heartening to see, I think, in our results is that, of course, there's demand in the market, but I think our growth rates have been higher than that of the industry, which means that we have been able to gain market share as well, which is not easy to do. And that's a result of, the things I spoke about earlier and the execution momentum.
Okay. Gauri, you did highlight industrial segment that also seeing a good growth. And specifically in your presentation, you've spoken about defense, marine, railways. That is something that supported the growth. But what about construction and mining? Could you give us an understanding in Q4 now? So far, have you started seeing an improvement here in terms of order book and order visibility, as well as in terms of defense, marine, railways? Has that continued to be strong in Q4 as well?
Yeah, sure. Great question. So, of course, we have several key accounts being construction and mining, defense, railways, marine in the industrial segment. And there are times when, one of them is softer than the others and they balance out, right? So what we've seen, like you mentioned, is very strong traction on the defense, railways and marine side, and a bit of softer landing on the construction and mining, which we hope will pick up in the coming quarters.
Okay. The international B2B revenues, they also increased. There was healthy traction that you saw across Middle East and North America. We have seen so much happening globally, right? So exports are around 11% growth. What is it going to be like, considering that US-India tariff deal is done now? And we were seeing some conversations around some Middle Eastern contracts getting cancelled. Do you think that is something which could impact an industry like yours as well? Can you give us a sense of what's happening in the export markets?
Sure. So exports for us is a big focus, and it's a place where we have to do a lot of internal work. And by that, I mean that, primarily our revenues in the past have always come from the domestic market, and we've really focused on building out our capability and our channel across export markets. The reason you've seen the growth in Middle East especially is because we have done that foundational work over the last couple of years, and we're seeing that traction now come through. When you talk about some of the, tariff arrangements and the other deals that are happening, When it comes to the US, specifically, even when the tariffs were high, it didn't really affect us because our business with the US was not very significant as a percentage of our overall revenue. But of course, now the new trade deal is, of course, very encouraging because the US remains a very important market for us to address in the medium term. We are seeing, that there's a lot of demand for power gen in that market, and we are thinking through how we want to address that. But it will take time because it is a large country and there are many applications, and there's a lot of capability building we have to do in the US.
Sure. Just the last one from me. Gauri, I want to know in terms of exports, what is your mix going to be going forward, given it's more margin accretive, right? As well as in terms of data center side, any focus, anything in terms of those trends that you could highlight as well?
Yeah, sure. In terms of exports, if you look at our results, we've had especially good growth on exports on the B2C side, but of course on the B2B side as well. That number has been about 34% year on year to date. And exports is, of course, more margin accretive. In fact, the three margin levers that we focused on are high horsepower, exports, as well as the aftermarket. And that will continue to be our focus because these are the margin levers in our industry. What was your second question? I think I missed that.
On data centers, Gauri.
Yeah, on data centers. So of course, data centers is what everyone is talking about. There's a huge demand there. We're seeing that as well. And I think what's encouraging is we do have a data center product, which we didn't have about a year and a half ago. We have a data center product. We're certified to work with data centers because they have very critical uptime requirements. And our service network is also extremely strong. And service is a very, very critical aspect for the data center customer. So we are seeing traction on the data center side, and we hope to build more market shares there.
Take that point, Gauri. A pleasure speaking with you. Thank you so much for joining in today with your thoughts on the business going forward and the aspects of specific segments as well. The stock doing well is up 5% in trade today.